Hey everyone, welcome back to Corporate Decoder, the place where we turn corporate filings into something you can actually understand. Today we are diving into a report from Burford Capital, and let me tell you, it involves more twists than your average legal drama. Get ready to learn how they are playing with money and debt and what it all means for their future. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss all kinds of corporate shenanigans and insightful analyses. Alright, let's get to it. This is a Form 8K report, which is basically a snapshot of important events that a company needs to tell the public right away. In this case, it's about a big financial move Burford Capital made. The main event here is that Burford Capital, through one of its smaller companies, Burford Capital Global Finance LLC, just wrapped up a private offering of senior notes. Think of it like this: they borrowed a huge chunk of money by selling promises to pay it back later with interest. How much did they borrow? A cool 500,000. That's $500 million. They're calling these promises senior notes, and they'll have to pay some interest on them. The interest rate is 750% per year. So who's backing this big loan? Well, Burford Capital itself is guaranteeing it, along with a couple of their other companies. It is like having multiple people co-sign your loan. These notes were issued under something called an indenture, which is basically a legal contract that spells out all the terms of the deal between Burford Capital and the people who bought the notes. US Bank Trust Company is acting as the trustee. A trustee is like a middleman that makes sure everyone follows the rules. Now, what's Burford Capital planning to do with all this cash? They're going to use it to pay off some existing debt that is coming due soon, a 6.125% bond. The rest of the money will go towards general corporate purposes. It could be anything from investing in new opportunities to paying off even more debt. When do they have to start paying interest on these notes? They will start paying interest in January of next year. The interest payments will be made twice a year, very standard schedule. The indenture comes with some rules that Burford Capital has to follow. These rules limit how much more debt they can take on, how much money they can pay out to shareholders, and what kind of deals they can make with other companies. It's all about making sure they don't do anything too risky that could jeopardize their ability to pay back the notes. These notes are not due until July of 2033. That gives Burford Capital plenty of time to make money and pay them back. But there's also a chance that Burford Capital could choose to pay them off early. There's also a clause in the indenture about what happens if there's a big change of control at Burford Capital. If that happens, they might have to offer to buy back the notes from the investors at a slightly higher price. Of course, there's a lot more detail in the actual indenture document than what we've covered here. If you're really interested, you can find a copy of it attached to this report. This section simply refers back to the previous section. Since they issued these notes, it means they created a direct financial obligation. In other words, they owe someone money. The exhibits are just the attachments to the report. In this case, the main exhibit is the indenture itself, which is the legal agreement that governs the notes. There's also an interactive data file, which is basically a way for computers to read the information in the report. And finally, the report is signed by Burford Capital's General Counsel and Chief Administrative Officer, Mark N. Klein. This confirms that the information in the report is accurate to the best of his knowledge. Now let us zoom a little and see whether this is a smart move for Burford Capital, or are they digging a deeper hole for themselves? It's all about managing debt and making sure they can generate enough cash to pay it back. While taking on more debt always adds risk, it can be strategic if managed well. They're essentially betting that they can earn a higher return on the investments they make with the borrowed money than the 750% interest they're paying on the notes. That's the gamble every company makes when they decide to borrow money, and seeing as they are in the business of risk assessment for litigation, maybe it's something they can be good at. Alternatively, if they can refinance their debt, it can become significantly cheaper. One potential weakness is that they are still on the hook for their older debt. If something goes wrong with their investments, they might have trouble making all their debt payments in the future. Overall, this move seems to be part of a larger financial strategy to manage and optimize their debt structure. The world of finance is always a gamble, and it will be interesting to see with certainty whether or not this decision was more useful or detrimental to Burford's long-term goal. Alright, that's our breakdown of Burford Capital's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.